Thank you, Sumaira.
Welcome.
This is outstanding coffee, Sumaira. It actually reminds me of a few friends who opened a coffee shop and they grew massively after that.
Yeah, and that's the kind of growth actually that equity mutual funds also try to offer. So they invest in shares or equities that have growth potential. Let's say if I was to start a cafe and the capital required for that is 10 lakhs, but I only have 25% of that amount. So I get 3 of my friends to contribute 2.5 lakhs each and start the cafe. Now all 4 of us are 25% partners. So whatever profit or loss the cafe makes, all the partners will bear it proportionate to the percentage of share they hold. This is the concept of equity.
On the other hand, if your friends would have offered you 2.5 lakhs each as a loan for a fixed interest and you remain the sole owner of the cafe, then that would have been debt. If you made bad coffee and if your cafe suffered losses, then the debt investors, who are your friends who have put money on an interest basis, will not suffer losses and you will still owe them the money with the interest which you've committed. On the other hand, if you make wonderful coffee and you become a millionaire with all the expansion you're going to do, then the equity partners who gave you money to become partners with you would become millionaires as well. Taking the same principle ahead, equity mutual funds invest in becoming partners with companies to grow their capital and get the appreciation which they deserve.
But the pursuit of higher returns also involves risk, right? So if you're the kind of investor who's willing to take on a certain amount of risk in order to get higher returns, then equity mutual funds are for you. Although your fund manager would try to bring down the risk by investing in multiple companies so as to diversify your portfolio.
And if you're averse to risk, then definitely debt becomes a good alternative for the person who actually dislikes risk.
By the way, Feroz, I'm actually planning to start a cafe. So are you looking to invest in it?
First, let me taste the coffee you've made.
Oh my God, then you're never going to invest in my cafe. If there's one term in the investing vocab that's surprisingly little understood, it's volatility. And Feroz, not just that it's not understood, but it's a term that's, I think, the most feared by investors.
Actually, people don't have to fear volatility, they have to understand it.